Good morning, and welcome to the ARC Protocol. I'm your anchor, broadcasting live from the heart of the digital frontier. Our lead story this morning, a massive and strategic shift in the global tech landscape. A new report indicates a torrent of capital is flowing from mainland China directly into the global artificial intelligence sector. We're tracking the money, the motives, and the market reaction. Let's plug in. Our top story comes via investing.com, which is tracking a significant surge of investment from mainland China-based entities into a variety of AI plays. This isn't just a trickle. Analysts are describing it as a calculated flood of capital, targeting everything from AI chip manufacturers to foundational model startups. The key question is the motive. Is this a strategic move by Beijing-aligned investors to secure a stake in the next technological arms race, or is it a flight of capital from a slowing domestic market into the hottest sector on the planet? The truth is likely a mix of both. What we're seeing is a clear signal that the AI power struggle is going global, with capital as the primary weapon. This influx could dramatically accelerate development for some firms, but also introduces a complex geopolitical dimension to boardrooms that were previously focused solely on code and compute. For investors, the takeaway is clear. The AI landscape just got a lot more crowded and a lot more complicated. Now, turning to the world of digital assets. CoinDesk is reporting on recent comments from the SEC chair, who hinted at a more measured and deliberate approach to crypto regulation moving forward. While falling short of the comprehensive framework the industry has been demanding, this language is being parsed by analysts as a potentially less adversarial stance from the regulator. For months, the market has been throttled by uncertainty. This shift in tone, however slight, could be a sign that regulators are beginning to distinguish between bad actors and legitimate innovation. It's not the green light many were hoping for, but it might be the first glimmer of a clear path forward, potentially unlocking the next wave of institutional capital that has been waiting on the sidelines for regulatory clarity. And in Silicon Valley, there's a chill in the air. TechCrunch highlights a new report indicating that venture capital funding for early-stage startups is showing definitive signs of a slowdown. The era of nine-figure seed rounds for a good idea on a napkin appears to be over. VCs are tightening their belts, demanding clearer paths to profitability and more sustainable business models. While this means a tougher fundraising environment for founders, it also signals a healthy market correction. The focus is shifting from hype-fueled growth at all costs to building resilient, efficient companies. This Darwinian pressure could ultimately forge a stronger, more innovative tech ecosystem. So, to recap the morning's intelligence, we have a torrent of Chinese capital reshaping the AI sector, a potential thaw in the crypto regulatory winter, and a back-to-basics reality check hitting the venture capital world. The market outlook is one of calculated tension. Watch for continued volatility in AI-related stocks as the market digests this new wave of investment. Keep an eye on Washington for any further signaling on digital asset policy. Today, the smart money is watching where the big money is moving. That's your morning briefing. I'm your anchor for the ARC Protocol. Stay connected.